When someone says, oh, they are just donating because they will use it for a tax write-off, what does that actually mean? They usually mean I don't understand how tax write-offs work. It is true that charitable donations can often be deducted from one's taxes, but some people seem to think that people can somehow save money through donating, which is almost never true. There are certain allowances in the tax code that let you claim tax deductions on charitable giving. I think it only reduces their taxable income by a certain amount. It isn't like it is free money. A lot of this went away with the Tax Cuts and Jobs Act, which significantly changed the tax code so that most Americans will see no benefit from itemizing deductions on their taxes. It means they have no understanding of taxation and they repeat a meme they saw somewhere. It means that person has no idea what they are talking about when it comes to finance. A write-off doesn't make something free. If I make 101 but donate 100 of it to an eligible charity, I only pay taxes on 1. So you're still out money, but you don't have to cover taxes on what you donate. One of the ways celebrities avoid taxes is by creating a charity in their name and donating money to it. That way they don't have to pay tax, but they maintain control of the money. Now, if they want to use it, they need to justify it as a business expense for the charity, so it's not a vacation, it's an executive retreat for the charity execs. It means they are trying to bash the generosity of the giver for their own purposes. A non-US person was confused by the term tax write-off and wondered how it saved you money. This thread makes sense, thanks all. How is it a write-off? They just write it off. Write it off what? Jerry, all these big companies, they write off everything. You don't even know what a write-off is. Do you? No, I don't. But they do. And they are the ones writing it off. What difference does it make? The money spends the same regardless of the giver's intent. It doesn't save you money, but in the big leagues it allows you to choose how your money is spent. If you had a choice of pay the money as tax, or donate it to a charity you support or one that might somehow benefit you, the donation begins to look more appealing. It's a misunderstanding. The USA has an unusual rule that income donated to charities isn't taxed, but you still lose money. Point 1. Sometimes people donate to things that they don't really believe in, but they can because they can deduct the donation from their taxes. Point 2. Anyone who thinks they have the ability to dictate how other people spend their own money should just fuck off. If you want a financial explanation, that is a different issue, but any stranger who tells you how to spend your money can fuck off. Deductions for charitable donations generally cannot exceed 60% of your adjusted gross income AGI, though in some cases, limits of 20, 30, or 50 may apply. Taking an extremely cynical approach, I commission an artwork from an unknown artist. I pay them $500. I hold on to this artwork for a few years. Then I get my art appraiser friend to come over and value the artwork at $30,000. I donate the artwork to charity. I get to write off $30,000 as a charity donation. So I get a tax refund of X of $30K. Because this reduces my taxable income. Repeat hundreds of times, and you might drop yourself down a few tax brackets. No worries having no income when everything you own is a business asset anyway. There is the fine art donation tax scam. It goes like this. Purchase art. A wealthy individual buys artwork, often from emerging or lesser-known artists, at a relatively low price. Increase artist's fame. The buyer then takes steps to increase the artist's fame and the value of the artwork. This can include promoting the artist through exhibitions, media coverage, and networking within the art community. Appraise at higher value. Once the artist's reputation has been enhanced, the artwork is appraised at a significantly higher value than the purchase price. Donate art. The individual donates the artwork to a museum or a charitable organization. The donation is made at the newly appraised, higher value. Claim tax deduction. The donor claims a tax deduction based on the appraised value of the artwork, not the original purchase price. This results in a substantial tax deduction, often much higher than the amount initially paid for the artwork. Tax savings. The tax deduction reduces the individual's taxable income, leading to significant tax savings. The difference between the purchase price and the appraised value effectively becomes a tax-free gain. It's a fair bit of work and tax authorities are starting to catch on. The real tax scam is with art. Rich guy buys a 1 million painting, sits on it for 5 years, gets it appraised by a friendly art dealer or art curator for 5 million, donates painting to museum and writes off 5 million as a donation. I'm not sure how often this happen. I have a friend who is a curator at a very large and famous NYC museum, and she gets approached to do appraisals and says that usually the art dealers are suspiciously a lot higher than her appraisals. If you donate a certain percentage of your income based off of your income, you receive a tax credit which lowers your taxes. You don't get the money back, but it can save you from owing more money. I worked at a tax firm and there are a lot of regulations, but also a lot of benefits to this. However, it typically needs to be a pretty substantial amount to lower your taxes enough to make a difference. In regards to tax write-offs, home businesses and small businesses can typically deduct office expenses from their taxes, which works similar to the above. A certain amount of approved write-offs will lower the tax rate and therefore save the company money on their taxes. It's called a write-off because you write it off your income, but that doesn't mean you are getting that money back. I can write off my cell phone because I use it for work, but I don't make a ton of money and my phone bill isn't that high, so it wouldn't affect my tax credits at all. Forgive me as I'm not a CPA, but I was required to prepare all the documents for review. I know business tax laws vary state to state, so I'm only familiar with California. When you donate to charity, you can then deduct that amount on your tax return, thereby reducing the taxes that you owe. It means they are ignorant of the tax laws.